If you're planning to retire the next 3 to 10 years, there's a quiet shift happening right now that can determine whether your income lasts for life or slowly collapses. Because in 2026, income annuities are going to look very different than they did just a few years ago. I'm talking about higher payouts, better guarantees, more flexibility. But here's the problem: most people don't know which ones actually pay the most until they have already locked into the wrong contract. So today I'm going to show you exactly how the highest paying income annuities for 2026 really work, and what separates the winners from the pretenders, and how smart retirees are positioning now to lock in future income they can't outlive. And before you ask, no, this isn't about chasing the highest advertised rate. That's a trap most retirees don't realize. For example, a few months ago, a couple in their early 60s came to me frustrated. They had talked to 3 advisors, seen 3 illustrations, and somehow all 3 promised great lifetime income. But the payouts weren't even close. One option paid $38,000 a year, another paid $47,000, and the third, over $56,000 a year guaranteed for life. So it's same age, same money. So the obvious question is, why doesn't everyone get the highest paying option? Because most people don't know what actually drives income annuity payouts. So let's fix that. Most retirees assume that the highest paying annuity is simply the one showing the biggest number today, and that assumption quietly destroys their lifetime income. Income annuities don't reward impatience. They reward structure, timing, and contract design. The highest paying income annuities for 2026 aren't necessarily the ones paying the most right now. They're the ones designed to pay the most when income actually starts. And that distinction alone explains why most of the income gaps retirees experience. So what else helps you get the highest paying annuity? One of the biggest factors that drive annuity payout is timing. Income annuity payouts are heavily influenced by interest rate environments. After years of historically low rates, we're now seeing higher base payout factors, stronger guaranteed roll-ups, more competitive lifetime withdrawal percentages, and insurance companies aggressively competing for retirement assets. In plain English, the contracts being designed right now are far more generous than the ones sold just a few years ago. And the people who benefit most are those who position before income is needed. Now, if you already purchased an annuity years ago, that doesn't automatically mean that you're stuck with a lower rate. In some cases, it's possible to reposition into a higher paying contract depending on your age, your timing, and your surrender schedule. In fact, some cases, insurance companies will even pay you a bonus for switching over to a higher paying annuity. If you would like to see what opportunities are available, you can always schedule a call by clicking the link below this video. If you already own an annuity and want to know whether it's still competitive, that's exactly what we review during the income planning calls. Another major factor is the type of annuity you choose. Not all income annuities are built the same, and compare them incorrectly is where retirees lose tens of thousands of dollars per year. Some annuities are designed to start income immediately, others are designed to start income later, and some are designed to grow income first and then turn it on when you choose. Immediate annuities can look attractive upfront because income starts right away, but they often come with trade-offs like limited flexibility, no access to your principal, and no ability to adapt if life changes. Deferred income annuities allow income to start later, often producing higher payouts, but they still limit access to your money. Now, where we're seeing many of the highest paying income annuities come from is fixed index annuities with guaranteed income riders. These separate your particular account value from your income value, allowing income to grow contractually without market risk. Once you understand how these annuities are structured, the income differences start to make sense. In fact, there are 4 variables that typically determine how much income an annuity pays. The first is a guaranteed roll-up rate. Many income riders guarantee roll-ups of 6 to 8% or more per year. These increases are contractual and not market-based. The second is the payout percentage when income starts. Some contracts pay 4.5%, others pay 6% or more. That difference alone can mean $10,000 to $20,000 per year for life. The third is age-based increases. In many contracts, delaying income automatically increases your payout percentages. And the fourth is how the annuity is structured for couples. Proper joint design can dramatically improve lifetime income, while poor structuring permanently reduces it. This is why generic online comparisons often miss the mark. We compare real contracts side by side using actual income numbers. Now, another thing to watch out for is annuities advertised as having the highest rate. The annuity with the highest illustrated rate is rarely the one with the highest income. Now, illustrations are hypothetical. but guaranteed income is contractual. So smart retirees don't chase projected growth. They lock in reliable paychecks. This leads to one of the most effective strategies we see today: locking in income terms now and deciding when to turn income on later. This gives you control. You're not hoping the income will be there someday. You already own it. Now, one final point that matters more than most people realize is comparison. The highest paying income annuities change constantly. One carrier may lead this year, another one next year. Another may offer the strongest joint income design. If you're not comparing the full market, you may be leaving income on the table permanently. That's why we independently compare top carriers based on your age, your goals, and your timeline. The biggest retirement fear isn't dying early, it's living a long life with shrinking income. The highest paying income annuities aren't about guessing markets, they're about engineering certainty. So if you want to see what your retirement income could realistically look like using today's strongest contracts, you can schedule a free income planning call with us by clicking the link below.